Hi everyone, welcome back to Be Rich. I hope you're doing well. Albin's not in office today, so Keshav is on leave today. So we still continue with our work. I got Rupesh and Karthik behind the camera today, catching me in action. Rupesh is going to be editing the video later on, so he's to make sure that I speak something of sense and I don't blither on with gibberish, so he doesn't struggle editing it today. So what am I going to talk about today? I'm going to talk about infrastructure investment trust. A lot of you have been asking me on Instagram, on LinkedIn, on Twitter. Anand sir spoke about a company, a very famous company called PGINVIT. And he had argued how them giving dividend at the price the share is at and the frequency of the dividend, it makes a good investment better than a fixed deposit because you get better returns than an FD on this company purely on the dividends because of the price it is at. A lot of you heard about this and thought it's a fantastic thing and started buying this in Tiffin Coffee range. Fabulous. I'm happy for you guys. Some of you were very zealous and enthusiastic and went and bought at car range. Not Tiffin Coffee, at car range, like buying a new car. You guys dropped a pretty chunk on this. Then the interest rate cycles kicked in and it led to some price correction. Then kind of recovered a little bit, then went through another severe correction, and now it's going through another correction. And there seems to be panic building. Should we sell? Should we sell? Should we sell? This goes back to the whole point of why are you buying it? What is your goal? What is your plan? Does owning this align with that? Please do not invest and buy just because something is mentioned in social media or mentioned in your social circles. Just because you have a very good friend whom you trust with your dear life. You see him doing something and he happens to mention this over a drink. You go back home and you decide you must be also doing this. This kind of reaction is as good as hearing the news of some celebrity nowadays has had a heart problem, has had a heart issue, and all of you go running to the doctor and say to the doctor, am I also going to have one? It's like that. You guys need to calm down. First, understand what this business model is. Let me explain in a very layman what this business is. Let's imagine you're running a school and you need to build a new playground or a new building for the school, and it's very expensive. And you don't have enough money to pay for this all at once. So, as I was saying, it is expensive to build this new infrastructure for your school. So, you don't have the money to put it all at once. So, then what you come up with a plan, you go ask people like parents and teachers to lend you some money to build this ground. And in return, you, the school management, promise to pay a little back every month, putting it back in their pocket with a little more. And this is how basically an infrastructure investment trust works. You pool in money and you help in achieving these big projects like building bridges, roads, power plants. These projects require huge amounts of money, and sometimes the government doesn't have the money, as always. So these kind of companies are created where they take money and they build these projects. So the money collection is collected and in turn it's given back to the people who invested the money, and more money can be collected and bigger things can be built, and this goes on in a cycle. So why is this cool? Because for investors it's a way to earn money, and from big projects which need to be built. Without this kind of help, these will not be built. And for the overall society and in the country, infrastructure such as big and electrification is required. So it is all a win-win situation. So this is what infrastructure investment trust is. Now, let's get to the meat of the discussion, which is PGINVT. So what is the problem with this company? There is no problem with this company. A company which is buying power lines and they sell the right of transmission on these power lines. And they've signed up with power companies across various states. And the power lines which they have bought, they're selling transmission rights to this. And they've borrowed money to buy these power lines. So far, all of you with me, right? So what do they do with the money, the revenue they're generating? They're paying the investors who have given them the money, and they borrow money to build more of these power lines. So what happens when the interest rates goes up is the borrowing cost for this company, PGINVIT, sorry, because I'm going to get a lot of ballers out there who's calling me saying, sir, you're saying it wrong. So PG Invit, we'll say, its borrowing cost is going up because interest rates is going up. This is true for all infrastructure investment trust companies. Not only this company, any company which is set up like this will run into this problem because the borrowing cost is going up. As borrowing cost goes up, future cash flows get affected. So amount of dividend maybe it's able to pay might get affected. So usually these companies take a beating in the stock market as interest rates go up because their business model is based around borrowing and helping build infrastructures. But if you look at this specific company, it has got a very large moat. They've already signed up contracts with power companies for 30 years, 35 years, out of which 29 years is still left. So revenues are going to come. The only issues they will have is purchasing new lines, yes, because of investment cost has gone up. These are temporary problems, short-term problems. But the business of the company itself has not changed. The logic behind why this company exists has not changed. If anything, with more EV plants we're talking about, more EV cars and bikes and everything being sold here, we'll require as a nation more and more power lines. We will require more and more power plants, and more power transmission needs to be fostered. If you take all that into account in the next 10 to 15 years, there's going to be great growth for this company. So if you look going forward, the future for this company in the long term is pretty good. So yes, you will see this correction. In the interest, like I explained, interest rate cycle which we're in is going to affect this company. And it's going to be challenges for the short term. How long will the short term be? I do not know. Is this short term going to be for a year, 2 years, 3 years? I do not know. The American market is already very jubilant because Powell's come out and he's kind of given an indication that you can expect some interest rate cuts next year, 3 or 4 of them, and they're all very jubilant, pushing the Dow already to rocket sky high. If this is true, maybe India will follow suit. I don't know. I can't see the future. I'm not an astrologer. But the fundamental business what this company is based on has not changed. Until that changes, I would say, yeah, you should be pretty secure in your knowledge of this company. And I expect all of you to do this kind of understanding and analysis before you go and buy any company. I would like you to find out how is this company making money? What is the business model behind this company? How is this industry structured? How do they do this? How are they paying me money? And is the price movement because of some fundamental flaw or change in this model, or is it some other reason? People are holding on to this company, feel that near future, at least a year or two, maybe the dividend payouts won't be as great as it used to be. So I'm not going to get the returns like an FD. So maybe I should dump this and move my money to an FD. Okay. In the short term, 2-3 years is what you're looking at, sure. But if you're looking at a 10 years, 15-year horizon, I don't know. Is it so bad? And won't you feel like an idiot? Let's say you bought it at 112 rupees, 110 rupees. It's gone down to 90 or even goes down to, let's God forbid, 80 or 75. And you panic and you sell it. And then you see 3 years later, it is at 120, 130. And you're like, oh my God, if I just didn't bother and I just sat on it, I would have not only recovered my so-called imaginary loss, I'd be plus 20, 15 rupees. I don't know. This is a very condensed video because time constraints are there on my videos. If I make it longer, if I talk for an hour, I've been told by my team people will not be interested in watching video where I'm sitting and lecturing and grandstanding for more than 10 minutes because I'm not Anand. I don't claim to be Anand. And my knowledge levels are very basic. And I try to talk at a very basic level because I do feel the people who are asking me these questions are people at a basic level. People who understand Anand and can catch what Anand's saying at a drift will not be asking me the question, should I sell, should I sell, should I sell? Those people will be knowing what I'm saying. This is meant for people like Kesav and me. So I've put this whole thing up as an article on my Medium page. I invite all of you to read it. Yesterday, I forgot to give Rupesh the link, so Rupesh had failed to put it up as the video launched. Then I popped in and I pinned the link in the first comment. Today, I'll ensure I give Rupesh the link, and he'll pin it as the first comment on the video, so you guys can see the first comment. It'll be from the Be Rich channel, like yesterday, and it'll link to my Medium page, and it'll show you that article. And I encourage all of you to read it. Not only to read it, to understand it. And what would be really heartening is that you've read it and you've understood that, and you come back and you ask me some questions on that, saying, "Sir, I read your piece and I think you're wrong because of A, B, C, D. I don't think this business model is going to succeed because of A, B, C, D." Come up with some reasons. I would love to have it animated discussion with you about it. That will be much welcomed and much heartening. I wish I could invite one by one all of you viewers into my segments here, and we can have an honest discussion and we can record it and share it with our wider tribe. Those of you in Chennai, some of you do reach out asking, "Can I meet you?" I would love to meet you. My time constraints are such that being a full-time dad, I have very limited time other than putting up with my boys here. Actually, I should say the boys putting up with me. My boys are very generous, unlike me, with their time. Thanks for watching the video. Do read the article. Do send me some feedback. And I'll see you on Instagram. I'll see you on LinkedIn. I'll see you on Twitter out there. Take care. Bye.
So after Kuwait, my team has decided to do an event in Trivandrum. Those who are desirous of meeting me in Trivandrum can contact our team at trivandrummp@gmail.com, the mail ID given below, or the WhatsApp number given below. My team would fill in you with the details. The event would be in January 2024. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.